Hello, today we're going to focus on the week ahead and also look at why equity markets saw declines on Friday. On Friday, we saw notable weakness across global equity markets, and really there was two reasons for that. Firstly, more developments on tariffs, and secondly, weaker than expected economic data from the US. 1st of August was always going to be a little bit jittery for investors. The tariff implementation was flagged for the 1st of August and that came through as expected. However, we know there was some smaller nations still yet to have successfully negotiated with the US a trade agreement. We saw trade deals early on that week from the likes of the European Union, but smaller nations, the likes of Switzerland, New Zealand, had still yet to have an agreement in place. So did larger nations, the likes of India. So we saw tariffs come out. Some surprises. Switzerland saw a 39% tariff rate put in place. India, 25%. Canada, 35%. So some surprises for markets, and markets that adjusted for that and were actually lower in the early sessions of the morning. But it was really the labour market data from the US that also added to the weakness in global equity markets. So for the month of July, the number of jobs added in the US labour market came in at 73,000. That was less than what is expected, which was 110,000. Taking that by itself wasn't too bad. But what was notable was the revisions to the prior 2 months of May and June, which saw a downward revision of 258,000 jobs. So that was less than what was initially thought. And that really spooked markets and investors, thinking that the US economy was far weaker than thought, and importantly, the labour market was weaker than thought. So we saw equities down, but bonds were higher. And that was really as investors had to price in lower interest rates in the coming months, especially for September. We also saw gold rally hard as well, providing some important diversification in a multi-asset portfolio. Interestingly, Trump, we know, is very unorthodox in his policies and the way he runs the US administration. He actually came out quickly following the jobs data to highlight that he thought the data was rigged, and as a result was going to fire the commissioner of the Bureau of Labour Statistics, the body that's responsible for the data. So that added to the tensions as well. Looking to the week ahead, it's going to be relatively light in terms of the economic calendar. We will have a bit of data from the US. We'll have the ISM survey business report. This is important. It gives you a good understanding of how the services companies are performing. We'll be looking at the employment data of that, as well as the prices data to see how tariffs are shaking up. And for the UK, it'll be all about the Bank of England on Thursday. Expectations are for interest rates to be cut from 4.25% to 4%. So we'll keep you up to date on that throughout the course of this week.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.